Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we talk about making money and options in a down market.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello, 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4%.
You asked the exact same question with two words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in Raw.
Featuring Dan, Deity Dips,
And Hugh Henny.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today we have a special guest. We've had him on. Is it maybe our most guested guest? It's his third time on. It's Manziel. How are you? And thanks for joining us.
I'm doing well, guys. How you guys doing?
Dude, hopefully better than Spy. I've got a lot of cash on hand. And, today, this week, we're recording this on Tuesday on the 25th. But, the past week and a half, it's kind of like it's a metaphor. War, about to be a war in the world, and it looks like it is a war in the market. It is pretty choppy.
Yeah, man. I guess what goes up must come down, right? So, but I'm happy to be back. Thank you guys for having me again.
Oh, yeah. Of
course,
no
bro.
problem. It makes our life easier, man. It's just like half less work for us. But judging by your tweets and your retweets of people that follow you, you've managed to stay afloat, and that may be an understatement for what you and your followers have been able to do in this market where so many others have been not doing so well. Can you kind of at least just giving us an introduction into how you are playing this and what kind of gave you the experience? Because, you're a newer trader as well. And were you even trading whenever it first crashed in 2020, whenever, you could have made tons? If you did puts at the right time?
Yeah. So that was right when I had started trading, was when we were going through the halt downs every day, right before COVID.
I thought those were normal.
Yeah. Yeah. We hit our 7% for the day, Spy's done. Right. So that's when I kind of first started, had no clue about shorting. That was right when I had found Hugh on Twitter and really started to, kind of get introduced to short-term trading, because up to that point I had only known about investing, you buy when it dips. But this was the biggest dip I had ever experienced, right? My grandpa had told me about 2011 or 2001 when, the towers crashed and everything. And obviously I know the market went through a lot then, but this was the first real dip I had been through. And then, but I had no clue how to short yet. But I spent a lot of time last March when we originally got this kind of that growth, it was the preview correction, right? Where all the SPACs got murdered, all the really speculative growth just got crushed.
It's where I think it was we were all saying oh, this is the hedge funds getting back at us for AMC and GameStop.
Exactly.
Yeah, little did we know that was just the that was just the first taste,
tip of the iceberg.
Yeah,
that was the trailer.
Yeah,
that was the movie trailer. But I learned to short Tesla and some of the Bitcoin names when that all happened. And then, honestly, I've just been kind of getting ready for this in a sense. I had been preparing the room a lot with hey, this is the best, way to kind of learn how to short, right? And learning these key concepts, because I saw the disconnect between SPY and all these equities. And I was like, you know what? I really think we're going to have some type of pretty serious correction soon. Just because you can look at that SPY weekly chart and just it's like kind of like, holy shit, like this thing has just been going parabolic, right? Like, so, just preparation and really understanding like, how to trade both sides is super crucial.
Yeah, everybody knew there was a ticking time bomb, I felt. But what's crazy is that when the other shoe dropped, it was like a surprise. And who even knows? Like, this could just be like a quick little correction, and then we're back to like business as normal. But it's like 2% down inside the market, and everyone's like, holy shit, there we go. Bear market back to 250 on SPY. Like, and who knows? Like, I'm not saying no, I'm not saying yes, but it's almost like everybody was waiting for it. And then it started to show signs of this, and everybody was like, oh, all right, back down we go. It was fun while it lasted, boys,
Right. Well, I think that's just, that's kind of the market that we're in, right? It's like, nobody really knows. I think it's the biggest, like, when I started trading, it was this, okay, buy calls, like, Nvidia is going to go crazy forever, or, whatever stock, right? It was the mid caps. And now it's just like, literally, like, we have no clue what's going on. SPY could go to 350 or it could go to 500. I just don't really think anybody has a good grasp on it, right?
I mean, I personally want SPY to go down for multiple reasons. One, because I don't have any long-term index holdings, like me personally. So, and the market's never not gone higher. So if you're an investor, I'm talking purely about investors. And I tweeted this and caught some hate for it the other day. You want the market to go down so that you can buy the dip. Like, if you know for a fact, which I'm going to say for a fact, I know that the market inside my lifetime will hit 500, higher than what it is currently, or, what the all-time high was. I want it to go down. Fuck, bring it to 50. Okay? Because at the end of the day, as an investor, the market's never not gone higher. Okay? Individual names, fine. But the market's never not gone higher. So I want it to go higher. And the other thing, and I think Manz will agree with me on this, is that the short side is so much better and so much easier to trade when it's there. And the reason that I've found that is because only like 10 or 15% of traders truly trade from the short side. So we get all these long onlys, and that's fine. I love trading from the long side. But the short side gives a much better move. We always talk about, and if you have a PGIR calendar, look up at it. It's the backside of the trade comes 10 times faster. The reason that is that's because it's not crowded, and everybody that buys the dip, once it keeps dipping, now those dip buyers become panic sellers.
Right.
Thoughts?
No,
agree.
100%, man.
Yeah,
100%, man. You hit it on the head. That's why the trade is so much smoother to the downside, is because there's just a lot less people making money, right? You have to think about it's just basically the inverse of like when a stock is long, there are so many people that are coming at it from that front side and they're all making money, right? Which is fine and it's great. But that's why it's kind of like a slow, gradual climb, right? And on the backside, it's like you said, you have 10% of that, like people that were long that are shorting it, because there's just not a lot of people approach it that way, either because they don't know or whatever, right? Or they feel like it's immoral, but there's money to be made there, and it's so smooth, right? Because there's these longs that are trapped, and you have to view it from that, side. It's like the way I look at it, some of the smartest people that have been, traders, investors, whatever you want to call it, right? They have come at this from the short side. Like, think about Michael Burry, right? This isn't even like stocks. He shorted the housing market, right?
Something that he couldn't even do before. He was like, can I do this?
Exactly.
He created a market.
I think exactly. You're going to see that soon. Like, I fully believe that you'll see that happen in like the NFT space soon. I mean, people are making a killing shorting crypto on the downside right now, right?
Be able to like fade someone's NFTs.
I mean, you could probably do swaps. I mean, why not? Why not? If I'm an ape holder, I honestly, I just threw out a name that I've heard. If I'm an ape holder and you'll give me $2,000 a month, but if it goes down to a certain price, I have to give you a certain amount of money. If I feel that confident about it, fuck yeah. It's like doubling up your position. You know what I mean?
Dude,
like,
I think shorting CryptoPunks isn't like a terrible idea. Shoot me now, NFT guys.
Yeah, you're not going to get, listen, that sounds like a game that I'm not built for multiple reasons. But I mean, fuck it, like if you want to take swaps on it, you want to risk your life, I'll be there for the ride to watch it.
Gary V would be enemy number one for anyone shorting in an NFT Woo, buddy.
Could you imagine? You're playing with fire.
Yeah, dude. He'd write a book about you. But you know, we kind of talked about it last time. How you said you didn't do much puts, but you also just said you were kind of prepping for this since like March. And
right.
Also, people say all the time, you lose more money waiting for the dip than if you just kept playing and it happened. How did you kind of see this turn in the market happening? How many calls did just not go your way until you said, okay, this is clearly time to reverse?
Well, honestly, I'm not going to say I've been like on this for like 6 months or anything like that. Like I was happily trading the long side all summer. Like I traded the melt up, all that stuff. When I really started to get ready for this side of things was when the long side trades stopped being as smooth. Like you can kind of sense it. Like when and people that trade options will know about this. If you don't, hopefully you understand. It's like when you're in that trade, especially with options, you can tell if the trade is working smoothly or not, because that premium is going to move, again, follow the underlying, right? But you can kind of tell if it's stiff and heavy or if it's just going really smoothly and there's a ton of liquidity, right? And especially when, trading SPY and QQQ and things like that, trades in both directions for a while got pretty forced. And then really the last 2 weeks, we've finally gotten a sense of direction and the short side is just working 10 times smoother than the long side is, right? It's like even when you try to trade the long side now, it just feels a lot more forced. There's not as many buyers, it feels like, right? So the backside of these trades are just working so much faster and so much cleaner. And I think that's what, when I saw that kind of happening on the long side, I kind of, was at least in like, okay, preparation mode. Like I just made a video, which is like how to short for dummies, basically. And then I'm not being, mean by saying that or disparaging. I'm just saying, like, if you don't know how to short, which I understand there is a ton of people that don't, like this video is really going to explain it in its like simplest form, right? Because there needs to be like some form of education on this, because I feel like, if not, then a bunch of traders are just going to get absolutely annihilated from the market. And I don't personally want to see that. I like progressing the community that we have. So I made that. And I, coincidentally, right, the week that we drop it, the Sunday, right, that yesterday happens, we get the big crash. And then, it was good timing, I guess.
So I know you keep saying short. Are you mainly doing puts or are you shorting it all too?
No, yeah, I'll mainly play puts because there's just, you can risk less and your risk is defined. So that's a big one, right? A lot of people, maybe you don't know the difference, right? Maybe if you've just been in small caps, you have heard of people shorting small caps, right? And like low floats and things like that, which honestly is like way too risky for me, because a low float like decides to ramp and go to, what was it? SPI went to like 100 or something crazy like that, right? It like
so
went
something
1,000%.
You can't recover from.
Right. There's unlimited losses when you are short equity, right? But if you take it from the put option side, you have a defined risk. Like if you buy a contract, a SPY put for $1, which is $100 in total, like, money coming from your account, you can only lose $100. It's not like if SPY just goes to, 500 the next day, you're going to lose your account. You're going to lose that $1 that you put into the option contract. So for me, it's the same, obviously more volatility. You have to be careful about which expirations you're playing, but it's just way more of a defined risk, which I like shorting via puts rather than equity. So I just play the put options.
Yeah. And it's nice to have some more education out on the short side as well, because it feels like, especially in the social media side of it with all these retail traders, the short side just keeps getting this terrible rap as just the bad guy.
Yeah. I mean, look at Nathan. Like, I mean, he's been on the pod before and like I'm sure, Hugh will say this too, but like he gets wrecked on Twitter because he's short a lot of names. But like his thesis in general is correct. I'm not saying I agree with like everything he does or whatever, but like we need to make this like more socially acceptable. Like there's so much money to be made here. And when I say so much, there is a lot of money to be made. Like literally just as wealthy as people got on the way up on GME, AMC, all those names, you could have or still can, gain just as much financial prosperity from the downside as you did from the upside. So, really what I'm trying to do is just, make it a little bit of a more approachable topic, right? That's why we like put the memes and the videos and try to make it as lighthearted as possible. But at the same time, like portray it as like, hey, like there's an opportunity here, right? And the education is there if you want to learn. you kind of, you know what I mean, Mitch? Like, you know?
Yeah. See, the thing is that everybody. So first off, it's like I'll see someone who shorted, let's call, Facebook or something, and they'll be like, "Oh, I just shedded, $5 billion off Facebook." No, you fucking didn't. Like, you caught the meat of the move. Congratulations, but. Like, I'm not un-American for shorting American companies. Like, that is like a huge thing. It's kind of like a lot of people get shit for 9/11 for shorting airline stocks. I'm not gonna comment on my feelings on that, but from the capitalist standpoint, it's like they didn't make the airline stocks go down.
Sick,
like,
dude. You watch Billions, man. I get it.
I was about to say.
Yeah. So it's like it's one of those things where I understand. Like the shallow level thinking, if you will, or like the first level thinking, but that's not it. And also from the capitalist standpoint, if it wasn't going to be someone else, if it wasn't going to be you, let's call it you, then it would be someone else. And then finally, the last thing about shorting is that, in my opinion, shorting comes down to two things, and it's incredibly simple. But that being said, it's incredibly simple, yet incredibly difficult because it comes down to managing your emotions. And those two things are, one, waiting for failed follow through and then, immediately short, and then having risk management. So if you don't have risk management, you will get smoked. That's why Manz was saying that he loves puts over commons, because it already defines your risk. If you never add to a position, and it's one of those things where you never add to it, but every single time you take this trade and you ride it to zero, as long as you have a good win rate, you will be profitable. But it's those situations where, if you short Tesla and then Tesla goes against you 600 points, let's call it, you could lose your house if you have commons. So to me, the two most important things are, like I said, risk management. And then also being proactive with your covers, because what we know is that the backside of the move comes 10 times faster. And so what we end up getting caught up inside the short side is that it's, we'll see like 4 red candles in a row and we won't cover because we'll want it to continue to go. But like the short side happens so fast. But then when people start to cover, all of a sudden the move will retrace half of what it did. So that's what I see is that emotional sense of like, okay, if it could just get back down there, I'll cover the rest. And then all of a sudden it moves back because then buyers step in. So same thing like shorts come in and then panic sellers. When covers start to come and then, FOMO buyers come in and then you have FOMO covers come in and the move's right back. So risk management and, taking the meat of the move and that's it is probably the two most important things. And I see the short side as being easier for most traders. It's just controlling those two emotions is so difficult.
Right.
Yeah.
No, I think that's huge.
Yeah. Go ahead.
No, you.
No, you go first.
No, I was just going to kind of affirm what he was saying. It really is an emotional game, and you just have to realize that, there's somebody else making money when the stock is going down, right? So you have to just make a choice. You can say if it's your religion to not make money, I saw someone say that, it's against their religion to short. And it's like, I'm not an expert on religious beliefs.
I'll have to look into that.
I'm not an expert on it, but all I'm saying is if you're making money on the way up, I think you should probably be able to make money on the way down too.
Yeah. And also it's like when people are doing DD, they're usually looking for good things. And when they find those bad things, instead of thinking of, hey, maybe I can short this, they're like, okay, on to the next company. Maybe Hugh told them, you're looking for these things and they'd find like, oh, this company sucks. Instead of being like, well, maybe there's room for this to go down. They're just, okay, on to the next. So it's kind of like they're just looking for good and they don't see the good and bad.
Yeah,
exactly.
Listen, China Hustle, y'all know I love that movie. It's literally my favorite fucking movie. I love it. Now, I don't really fuck with some of the main characters inside that movie because I don't fuck with them. But the overall hedge fund activist shorts, I'm all there, baby. I'm there.
I was gonna say this wasn't gonna be our third podcast if Hugh didn't mention China Hustle. So
I love China Hustle.
the pod is now official.
Love it. China Hustle,
who
you
has
wanna
live
sponsor
sports too, dude. So it's the only place to watch the China Hustle. So make sure
I love it
who's
because-
got
Go ahead
live
and get it.
sports.
Because not only do I like it from your perspective, from the perspective that Dan was talking about, like, hey, if you see something wrong, you can short this down. Like, it truly uncovers how fucked up the market is. Like, and I understand that it was super fucked up at that time where companies were taking reverse mergers and were basically taking like farmers from third world countries and making them CEOs and like sticking like $100 million market cap on these companies when they did like 100,000. Okay. So I understand that like it's super elementary and like, yeah, like that's like really bad, but it shows that like anything can get listed. Like we're supposed to just trust the NASDAQ. Like we're just supposed to trust like these, third party, to list them on, to list good companies on the exchange. And that's just not true. And I think that movie truly shows like, oh shit, like this is nuts. Like this is actually happens. And it'll be the same thing with the SPACs. We talked about the SPACs when the SPAC a year plus ago. And I said, listen, the first wave of SPACs probably are okay. The next wave, smart money will start coming in and you'll start to see really shitty companies that probably aren't companies. And like, I was calling them smart money. And it ended up being that even the first wave of SPACs kind of seemed like bullshit. So I can't wait for a movie on SPACs. I think that movie will be really good too.
I mean, what is it? Beachbody, right? It was like touted as like the next Peloton, and now it's at like $1.50 a share. Like it's insane to see. Like if you think about it, in all reality, the one SPAC that I can like honestly say has been successful and like is a real like bona fide company is Lucid, right? Like that's the only one that's like really come out of like the like Highland, right? Like Nikola, like all of these like just scam companies. Like
shout out Alex Cutler.
Yeah. Right. Like he might be in another one right now with Polestar. We don't know. Right. But literally it's like insane. And look at but the one that has come out of that has been successful. So that just like kind of shows you like cream rises to the top, right? Like I remember the day that Lucid delivered their cars, like the day that people got the keys in their hand was the day that it also simultaneously broke out on the chart and it went like 30%. Cause it was like, okay, this company's real. Like these cars are on the road. Like it's actually happened, which you cannot say for like any of those other companies.
Natasha Fisker or anything, is it?
Yeah, I don't know, man. I want to see those cars on the road.
they listen. I think they follow you. You guys follow each other, right?
She unfollowed me after they fixed my merchandise order. But we'll still
short Fisker.
Yeah, no, I think there's still potential there.
There's still potential. She probably did it on accident, honestly.
No, she probably did it. Oh, no, I think she did the merchandise mix up on purpose just so I could DM her. But
that was it.
I think so too.
Yeah,
no, she said
it's just nice to see her on posting Instagram story every now and then.
I respect it.
So question, because we talked about crypto earlier.
Yeah.
And you used to trade Riot and Mara a lot.
Every day.
Do you have much crypto? Like I know you have some crypto.
Very, very small. And I'll kind of give you the reasoning behind it is so crypto for me is never something that like, while I'm sure I could trade it, like the chart is the same. Personally, I just don't know it as well, right? Like, so I like to stick with what I know best. As far as owning it, long term, like I see the application for sure. Like with NFTs, I see the like applicability of in like housing titles. Like, yeah, this like it doesn't need to be on paper anymore. Like the blockchain could verify that. I get it. And I think that there's going to be a couple that like really succeed, right? So I have probably like less than 1% of my like total long-term portfolio allocated because I think that we are in a bull cycle. I think that we are like maybe mid to end bull cycle. And I really am trying to, my gut here, and I haven't been old enough to really like have gone through the last cycle as as an investor, but I think that we're going to see history repeat itself in a sense where we see this like really harsh NFT and crypto winter. And I think we're going to see that like 70+% correction. I mean, we've already seen a 53% correction on Bitcoin, right? So that's why I don't own too much yet. I would be interested in definitely acquiring some more of it when people like hate it more. And
Yeah, whenever I go to one family event and I don't get asked about anything blockchain related, I'll start really thinking about it.
Yep. Yeah, that's when the money starts coming out to buy the dip for sure. No, it's the truest adage though, is like if the 99% are doing something, like it's probably like maybe like, you don't want to be that 99% at that time, right? Like if everybody's FOMOing into Bored Ape Yacht Club, like maybe you should wait. Or like look for a better. I think that's like the truest. It's an adage as old as time, right? So,
yeah. I mean, the only time I've seen it work in the stock market is like 2020. Everyone just gets in something, and sure as hell, it just goes up. No, it never stops, dude. What a time, man!
And look what happened, and we're paying for it now.
Yeah, dude,
and we're paying for it.
Run, party close to the door, dude.
I saw something. I saw a tweet yesterday. I'm talking about January 24th. What was it yesterday? Monday, and it said something like Uncle Joe sitting down at his desk right now after the market closes to see that like he made $400 or something, but has no idea what happened in the market. Like has no idea at one point in the day he was getting absolutely wrecked.
Yeah.
Like if the day had closed down there and it had happened like 30 more times, he would be broke.
Yeah, no, for sure. It's definitely one of those things. Like if you're not paying, oh man, it goes down, goes back up. I don't think Uncle Joe is going to add the dip anyway, so it's all good. But
exactly.
Like my parents check their accounts like quarterly, if that, and that's like me.
Right.
That was me like begging them. So I think it's so. All right. Do you guys ever feel? All right. I know we're getting off topic. Do you guys ever walk around and be like, these bitches have no idea what's going on right now? Like,
no. Do you think
my mom has?
Do you think an architect just walks around and he's like, man, they have no idea how many bricks are in this fucking house?
Yes,
I feel like they definitely do. They definitely do. Yeah.
Like I walk around and I hear someone like talking about like a $7 coffin. I'm like, you're gonna want that back tomorrow, baby.
Assuming they're invested at all. But so last time we kind of talked about how, when you're doing all your calls, one of your favorite things to do are the sympathies. When we kind of mentioned earlier with, Bitcoin sympathies and the EV sympathies, et cetera, without kind of spoiling your shorting for dummies videos. And we'll kind of get to how to get to that later or how to access that later. Would you kind of name off a couple of your strategies that, the average guy could use, or girl, assuming you want short, for, strategies for getting puts or maybe even shorting, should you so please?
Yeah, absolutely. So like one of the best, entry level strategies is like first just, read it, like be able to read a chart like somewhat, right? You want to really like try to understand those like basic support here, resistance here, like people like to buy it here, sell here, right? And then as far as like shorter term trading, right now, the only things I'm really trading are SPY, QQQ, NVIDIA, and that's really honestly been it for like the last, like I'm a guy that I don't need a million stocks to make money. I make my living off of, 2 or 3 stocks like most weeks, right? Just depending on what has good volume. Right now, SPY and QQQ have great volume. They also happen to respect levels like pretty well. And I would, one strategy that I use is just looking at that hourly chart, maybe like before you go to bed, the night before, and looking at that time frame, because that's giving you like a little bit of a view of like the past, like, 5 days, whatever. And, understanding, okay, like we've had a lot of, like yesterday, for example, right? We gapped up like crazy at the end of the day, but where did, SPY end up stopping, right? At the end of the day, it stopped right at a big resistance point on the hourly. So I came into this morning as, okay, like we probably at least need to flush back down and retest prior, resistance and confirm a support. So at the very least, like I'm going into that day with like 60-40 short bias because we're at resistance, right? And at its simplest form, like trading is about, if you're a buyer, buying at support and selling at resistance. And if you're a short seller or you're playing puts, it's about shorting at resistance, right? And having a stop above that. So that's one of the tried and true, like best entry level strategies is just do that with SPY and QQQ, play around with it, and don't like blow up your like freaking account. Like take it like really slow, like buy like one put and then like see if you understand what's going on. And like, that's the way you're going to learn, right? It really is that simple.
So you're more of like a day trading options kind of guy. And
right.
Obviously, like we were talking about earlier, there's tons of money to make playing both sides. Are there ever
Absolutely.
times where your call works out so successful during the day, you just start putting it once it hits a peak?
Yeah, I mean, absolutely. Like I do that with SPY and QQQ all the time.
Yeah,
so like last week, I shorted the open and on Monday, and then similar to yesterday, like played the long side into close. I didn't play the long side yesterday, but I'll trade both sides every single day, all the time. Like I will literally get out of my call. I did it yesterday, got out of my call off open for like 38%. I think I was in it 10 minutes, and then I shorted and was in that for like 30 or 40 minutes. And I have literally like perma, no bias. I literally just play the levels that are in front of me, which is like the whole thing I preach in the room all the time is that it's the only thing that matters. Like everybody that is out here using like 30 indicators is probably just like off their rocker or looking for a crutch. Like at the end of the day, it's about psychology and where people like to sell things and where people like to buy them, and traders respect that. So
what do you think is the most difficult part of transitioning from playing one side to now playing both sides, at the same time? Because I know a lot of people, it's like, okay, I finally am good at this. Do I even need to kind of, learn the other side? But then they get in this market and they're like, shit, well, maybe I do.
Yeah. Well, the answer, in my opinion, and it's only my opinion, but is yes, right? Like you should just, even as a life skill, it's good to know how these things work, right? Because it's going to teach you more about the psychology behind it than anything. But yeah, like, it's the biggest hurdle to get over is just like that. Those first like 2 or 3 trades are probably not going to go your way. Like you might just pick a bad spot, or you might wait for it to come down too much. Right. And that can kind of be discouraging, just like when you start trading. Right. But it's going to come so much quicker than trading does, because it's the same thing. It's literally just in the inverse. Right. So it's going to come way quicker. And once you have that first like really successful day, which I remember for me was last March, I want to say it was like the Coinbase IPO day. I shorted Riot directly off the open, and I think it faded like 18 or 19%. And my puts went like, they were weeklies, and it was a Thursday, and I think they went like 700% and like maybe 1,000% in one day, like from open to close. And there was like never a point where I was red, and I was like, oh, so like this is like the possibility behind this. And I think I like at the time like did like 25% on my account, right, or whatever, right? And it was just like, okay, I like this, and that's what got me into shorting in the first place. So just play super small, like at first, like get a couple wins under your belt, even if they're small, and then transition with some size. And once you get your first winner, you're going to be like, okay, it's the same shit. Just, it's real money, right? Either way.
So one last little update from your previous one. Are you still doing your account size the same way, where you keep a set amount in there and just kind of withdraw around it?
So that's a good question. So I stopped doing that I was doing it all of last fall up until October, when DWAC went crazy, and then I sized up. So like at most times I was trading with like 100 in my options account. When DWAC and all that happened, I sized up to basically triple that. And then I let it kind of go while the market was hot. But unfortunately, we only got that really crazy like range market for like 2 weeks, right? It was like DWAC and then GNUS and then like some other mid cap names ran, and there was great money. But once that stopped, I was like, you know what, I just keep it at, a certain amount now. I keep it at like 250, and then just, I never, one thing I will say, and maybe it's like a disclaimer of sorts, but options are made so that you don't have to risk as much capital. So like, I would be very careful. Like if God forbid you do have like a 6-figure account, my max size on an options play is never more than 10% of my account. There's just, like at some point, it's just the risk reward. Like you might as well just trade the commons, like definitely long side, but you might as well just trade commons at that point, kind of, it's like you're kind of risking a ton of money at that point. So just be smart about how you size into things, especially because you can, one one little move can cost you 30% playing options, right? That's the big difference.
All right. And we are not, we never like to promote too much paid stuff, but yours is a totally unique service, I feel like, with all the videos and the options calls and tons of great, reviews. So I think it's, would be doing you a disservice not to. So would you kind of tell us what you offer on your Patreon or in your room, and kind of, let the people know how to get in should they want to?
Well, I mean, we're still going to get paid for this, right?
Yeah. Come on, we signed the agreement. No. Yeah, you know what? I never try to force people to join if they don't want to. It does take up a lot of my time, and that's why it's paid. It's my time, right? Which I do value. But we have, especially the last few months, have really upped the game in terms of the video production, right? Like that's one of the big ones that we're doing a video every single week now with a lesson, which is supposed to be kind of built around people with smaller accounts, under 25K. Just kind of really enforcing high quality lessons on those really what I believe are the much needed principles. I do a private Twitter where I journal my options trades throughout the day, so you can kind of see what I'm doing and hopefully develop your own system based on that. But it kind of gives you that guide of okay, well, this is what Man's doing. Most of the people that have a lot of success are usually oh my gosh, when I do a one-on-one with someone, they'll be I finally realized I was getting it when I was entering your position at the same time you were. So I really think it's about the education. We do a pre-market live stream every day, and then I've been doing a power hour live stream too now. So it really is kind of an all-encompassing thing. We really try to start with a good foundation, but it's a good community. I love it. And so we have a Patreon. It opens up first of every month. So,
coming up soon. Yeah, it'll be.
Yeah, exactly.
Well, I think this one may be coming out right before. So what's Sunday?
Yeah, the day.
Day before. A couple days before. So make sure to reach out.
Yeah.
We'll make sure to tag them on Twitter whenever we post it. And thanks a lot for coming on in the middle of the day, man.
Yeah, man. Of course, I was happy to. I'm sorry my eyes are deviated being over to Spy and QQ Cube.
Man, me too, brother.
Yeah, I know.
We're in a phone call right before.
All right, guys. Well, thanks again. We'll see you guys on Wednesday.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.